Has the US dollar officially lost its edge? Let's dive into the key fundamentals and technicals and find out. Hey, baby, I hope we're all well and truly lit. Yes, we're back. We're back with another week in the markets. And boy, our fundamentals getting even more sexy and juicy. We'll dive into the dollar in a moment, guys. I am here in Cuba right now, enjoying life. Cuban life. As you can see, look at my setup. These are my setup views there, as you can see. Once obviously the curtains are open, it's a really nice view. Look, man, I can't help myself but to stay active even when I'm on holiday. That's what it's all about, right? Because I wouldn't be here if it wasn't for having this in my head to allow me to do such things, right? And, you know, a key part of my success and my journey continues to be as a thanks to understanding those key fundamental themes. Anyway, let's jump straight into this video, right? Dollar, okay? With the dollar right now, you can see it has been losing its edge. If you look at my screen here, I just want to show you the monthly first of all. Right, obviously we still got a little bit of the month left for May, but right now this is not a great performance for the dollar. We are coming under some selling pressure, and you could almost view this as a bit of a rising channel, a bit of a potential bearish flag pattern forming there, subject to some further downside pressure potentially. All right, before I jump down to the lower time frame, just want to get your attention on why we started seeing this dollar selling really sort of picking up some pace in the latest week, and it started off on Tuesday last week, where we observed the PPI data, as you can see here. Now, at initial plain sight, okay, and this is what I said to people when it came out. At initial plain sight, you think, oh, the PPIs are higher. That is bullish dollar, it's sticky inflation. But no, this is why it's very important to understand fundamentals. And I preach this all the time in the community. It's very important to understand fundamentals because you don't just be narrow-minded like some of the markets where they don't have that level of knowledge. Don't just be narrow-minded. You've got to look at the bigger picture. So I was observing the bigger picture, and I saw how the previous readings, you look at the previous readings on these PPIs, right? They were revised from 0.2%, okay, if you look here, plus 0.2%, down to minus 0.1%. So deflationary there, disinflation. And look at the previous reading there as well. Also revised down from 0.2% to minus 0.1%. So this uptick that we've seen there in expectations is basically balanced out by the fact that the previous reading was a contraction, a lower reading, a negative number, disinflation. And when you look at the bigger picture on an annualized basis, right, taking into consideration these revisions, the previous number being revised lower, really inflation is still moving in the right direction, as in down, disinflation. So we're seeing that. So that's why you would have observed on that day, on Tuesday, we had that downside pressure for the dollar index. Okay, if we just quickly take a look at Wednesday there. Last Wednesday, Wednesday here. Look, downside pressure on Tuesday, first of all, all right, on those PPIs. So the downside pressure. Now, if we go forward a little bit to Wednesday, now we're talking about Wednesday. Look here. Okay, really important that this coincided with those PPIs. So the CPI is the consumer price index. Remember, the PPIs are the producers' prices, what it costs for producers to produce the goods that we consumers. Now, our consumer prices, right? Yes, all right, in line with expectation, but lower than previous, coming down there to 0.3% from 0.4, right? On the month-on-month headline, lower than expected, 0.3%, lower than expected and previous. Year-on-year annualized, very important, 3.4% from 3.5. Now, to tie into this, allied with these lower inflation numbers, lower CPI, which is further disinflation with the PPIs that we had. Look here, this is also disinflationary. Look at retail sales numbers, 0.2%, much lower than the previous of 0.9. And that previous was even revised lower from 1.1, okay? Revised down to 0.9%, bad number, okay? And the headline, zero, no growth there. So what does that tell you when you're thinking fundamentally on a macro level like a beast? What does that tell you? It tells you that retail sales have dropped. Why have retail sales dropped? From a consumer's point of view, the consumer's not spending, right, as much. So the retailers are not doing well. So their sales are going down. What does that mean? That's disinflationary. So you see all of this disinflationary data. Also the Empire Manufacturing Index data, not good, minus 15.6. Bad number. So this is all disinflationary, which is why we're seeing the dollar come under pressure. Look at the latest week there, the weekly performance finishing in the red. And it goes back to obviously this technical pattern that I was looking at, a potential bearish sort of channel right? This rising channel, we look subject to breaking out and coming to the downside. Now, obviously, at the back end of the week over Thursday, Friday, we needed to see a bit of a technical correction anyway from that excessive selling, okay? And we're just sort of pulling back and just watch this retest right now, guys. Watch this retest, because if we get those rejections at that key area of supply, this 104.80 towards 105.00 area, you know that selling is going to potentially resume there, all right? Now, we've got to watch this because it could prove to be a fake out. We will see in the latest week, all right? Now, before I sort of further take a look at this, there's a few things, there's quite a few things I want to talk about in this rundown. But if you look here at the Fed CME watch tool, so the Fed watch tool, right, we're not expecting a cut in June. If you look here, low probability. We're not expecting a cut in July, very low probability, right? Remember, this is the probability of them cutting rates, okay, going by the futures markets. In September, decent probability now, 65% chance. November, very high at 77%, and December, 89, basically 90%. So there's high probability that we're going to be getting those rate cuts either in September, November, or December. Remember, markets want 2 now, which is why stocks have been rallying. Remember, we had that big record highs printed in Dow Jones, SPX, NASDAQ. All the indices have been pushing higher, okay, in anticipation of that low interest rate environment. Remember, stocks thrive in low interest rate. They're greedy bastards. I shouldn't even drop the B word, sorry. They are. From a business perspective, right? If we've got lower interest rates, it means potentially bigger profits for the business, or at least bigger, more cash to go and boost business infrastructure, go and boost operations, go and invest, right? Because we're lowering business costs as well, okay? Understand? And it also good for the consumer. If consumers' costs are going down, i.e. your costs on your interest on your mortgage, your credit cards, your car loans, all of that, it's going to free up cash for the consumer, so the consumer's going to want to go out and spend again, okay? Do you understand? That's why we can't as well cut rates too prematurely, because it creates inflation. Do you understand? Okay, it creates inflation. Now, just quickly, obviously I spoke about this a little while ago, right? Didn't I? And it's funny, it's almost, maybe some of the big boys are watching my videos because I spoke about this a while ago. And only in the last few days are we starting to see people talk about it, because I was looking at the data. See what I mean? I look at things at the bigger picture. This is something to talk about down the line. Okay, we're not going to have a massive impact right now in the markets, but it's something to be aware of, how Americans are just maxing out their credit cards. Look, you can see it's being published there by Fortune. It's being published here in, once it decides to load, in Fox News, and also here on USA Today, right? All these big news outlets are reporting this now. Americans are maxing out their credit cards, which is worrying times. They're feeling a bit of a squeeze, obviously, in this higher interest rate environment, okay? And obviously, they're going to be paying higher interest on all these loans and then these credit cards. It's going to cause some problems, okay, down the line, which we'll go into more detail on that again at a later date. But I'm just feeding you that information for the time being. Now, this week, right, what can we expect for the dollar? Okay, when you look at the data this week, let's just bring it up here in the latest week. We don't have anything massive, right? But we do have various FOMC speakers when you look at the calendar. If we just filter this out, put this for dollar. Okay, when you look here, various Fed speakers. So everyone's going to be clinging on to every single word that these members say, because it's like, are you guys going to acknowledge now that we've made serious progress on inflation or disinflation process? Are we getting near to those cuts? Are we going to see multiple cuts this year? Okay, markets are going to be really clinging on to these words. So expect some volatility around the dollar with some of these members speaking. FOMC meeting minutes, I think pretty much non-event. It should just confirm they're moving towards that dovish stance. We'll keep an eye, because markets will want to see, are there cracks in the economy? Yes, we're seeing disinflation, but are we getting cracks in the economy with some of the key data points? So keep an eye on these manufacturing and services PMIs, because if those come out lower, that's going to definitely invite another wave of downside pressure for the dollar. So you really want to keep an eye on it. It's important, as I say, markets are looking for more excuses for those rate cuts to be priced in. You know, maybe, you know, they always want more. So you know how right now they're working towards 2 cuts. Maybe they're pricing 3 in that September, November, December period. Maybe we'll get 3 cuts if we start to see poor data. So they'll start to price that in, all right, if we're starting to see more cracks in the economy. So keep note of that, guys, okay? So a lot of talking points right now. Now, sort of everything else, there's a lot of other data points to be aware of this week for the dollar, for other economies, such as we've got UK inflation, which is a big one. We've got the RBNZ, okay, rate decision. We've also got Canadian inflation data this week. So there's a number of key data points that you must be aware of. And things, when you look at the dollar pairs, they do have the opportunity to potentially capitalize on this pullback for the dollar. All right, they do have potentially opportunity to capitalize. I'm just pulling up sort of a naked chart here. I do have some analysis, which, you know, with all of these, everything outside of the dollar into detail in the premium part of the community. We look at trade ideas in the premium part of the community as well, because it's obviously everything. There's other things influencing that dollar index that we look at, right? There's a ton of other things. So if you want more detail on that and more sort of trade ideas around that front, and more fundamental analysis outside of dollar, obviously, guys, you can check out the TFTC premium membership. That's if you want to. You could do your own, obviously, analysis. And obviously, a lot of what I speak about, right, and it may initially go over the top of your head, but I break this down in the most simplified, digestible form, which there's some serious hours in that fundamental course. I wouldn't promote it if I didn't see value in it. And obviously, everyone else sees value in it. So you can check that out if you do want to just jump to that serious next level. Okay, serious next level. All right, guys, that's more or less it for me. Have an amazing and blessed week. Let me know in the comments below, okay, if you see the dollar heading to the downside in the coming weeks. Okay, I do have another view on the dollar over the sort of medium longer term, but I'll save that for another video. Okay, smash that like button for me, because I'm trying to stay hungry to want to produce content on YouTube, because it does take up my time. And also hit that like button. Stay lit, stay blessed, and let's get it started.